The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners are having an exciting trading week. I'm sure many of you are given some of the action we've been seeing on the street lately. I am your host, Mark Longo from theoptionsinsider.com, your host for this joyous romp through the world of options. And I am joined by the usual cast of characters, starting off with Mr. Tim Navabi from Options Express. Tim, how are you doing this fine Thursday afternoon?
I'm doing very good, Mark. Thank you very much. Real busy day. Very, very busy, so I'm finally putting myself together here.
I should mention to our listeners, too, is the reason you're getting real tones out of Mr. Navabi and you're getting all the background noise and everything, too, is because we are doing this live all around the same table for the first time in a while. So it's a fun process for us. If I can get Mr. Tusaw to stop drinking, we'll have a great time here on the table. And speaking of which, I am also joined, as usual, by the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how are you doing today?
Just excited to be back at OX headquarters. We're here where things get done over on Monroe Street, and this is going to be an exciting show. It's kind of awkward actually seeing you guys face to face right now. I'm a little bit nervous.
I know I am intimidating when you see me up close. You know, it's something that a lot of people, I have to overcome that on a regular basis. But it's all right. Take your time.
I just have a basic natural shyness I need to overcome, I think.
And unfortunately, we have one sheer absent today. That is the Greasy Meatball is on assignment. He seems to be afraid to do the live shows. I don't know what it is. I think he's intimidated by Uncle Mike. That's what it must be. So we are a man short, but nevertheless, we shall soldier on and have a jolly old time in the trading block. It's going. Looks like it's going good. And welcome to the Trading Block. This is the section of the show where we discuss what's lighting up the tape and what's catching our eye from an activity perspective. And I've actually had an unusual perspective today. I've been actually in a lot of meetings, so I haven't had a chance to watch my site or the market as actively as I usually do ahead of the show. But I know the Dow market was obviously a weak day as expected, given all the unrest and uncertainty still going on in Libya. I think the rumor of the day now is that Gaddafi may have been shot. Of course, that is getting debunked by some sources now. But that seems to have given a lift to the market. That and also given a bit of an ease to the crude market, because crude fell towards the end of the session today, I think about $2, Tim, if that's correct. Mm-hmm. And then, of course, that gave a little bit of a boost to the markets, and they closed closer to unched than they had been most of the day. Dow closed down about 45 points, S&P down about a half a point, so nowhere near what they had been. But, of course, it's been just an exciting day across the board. So before I start listing things, I'm curious, what have you guys been watching? What has been taking up your time over these past crazy couple of days since we've last talked?
Silver and gold. I know that's a shocker to hear me talk about that, but what I'm finding it's kind of interesting right now, I'm looking at GLD. It's going up to the 137 levels, 137, 138, and it's kind of stalling out there. So what I think we're going to have to do is just see if we can break through that level for right now. And obviously I think it's a lot going on in the Middle East. That's why we're having a little bit of a run in gold right now. I know I'm stating the obvious with that, but what I found interesting is that It was up around the 137 level at the beginning of the day on Monday, and it's still there right now. So we haven't had the follow through with gold that, if you're long gold, you'd like to see.
How did silver fare today as well?
It actually went down. I know I'm kind of in a shock saying such a thing, but silver I think might be pulling back a little bit. So with what it's doing today, I think that silver just had such a rally this week. I think it's just been a little bit of a pullback right now.
I'm telling you, ever since I sold those 26 puts, the thing has never looked back. I have that magic touch. It didn't work out that great for us. The thing didn't bounce till after we closed it, but I did it more in the spirit of for your customers than anything else and your clients, Uncle Mike. I mean, you wanted a bit of a silver rebound.
Well, we're flat right now, silver. So,
really?
So thanks a lot.
Oh, well, it was a while ago, so hey.
You know, most traders will tell you that they could stop any rally. It's very, very easy. I could stop any rally, watch me go buy one, and then it's over. So
I wish good old Mr. Grigas was here. He's off on vacation with his family, but I'm sure he's pretty excited because he's been shorting every day for months now, and it's finally turning his way. So I would like to see. He did look pretty happy when I saw him earlier today. He had a smile on his face. So his shorts are maybe they're finally paying off. Of course, the guy's probably short from like 10.5 in the Dow, so he's probably not looking too good. But yeah, aside from the Gaddafi rumors and oil, and I'm sure you get a lot of calls on the desk today for oil, Tim, I'd imagine.
Lots of calls on oil, lots of calls on gold and silver. Lots of calls on the agricultures. Mostly I'm talking about commodities here, and some of the other commodity bonds as well. People are now starting to get a little bit of interest in bonds, or they were yesterday. So yeah, it's pretty much a oil, gold, bond, agriculture story from me. And some S&Ps. I saw this morning, I spent a lot of time with a customer who was really putting in a lot of orders on a lot of accounts, going along the S&P. And he was doing it by selling put spreads down in the mid, like 125 area, kind of all over the board on time. So
that's not a bad approach to take these days for putting on some bullish bets in the S&P, because we have been discussing quite a bit on the show the fact that the skew in the S&P is still a bit out of control. Regardless of the VIX going up, the VIX going down, the downside tail risk fear in the S&P is still pretty hefty. So those puts remain pretty meaty regardless. So if you're going to do some sort of limited risk strategy like that, which is a spread as opposed to naked shorts, and probably downside in the S&P is not a bad place to pick up some premium there. What about you, Uncle Mike? Are you guys shorting any downside in the S&P these days?
Not necessarily the S&P, but we have a strategy that we do to where we'll short various sectors, short puts in various sectors, and we'll use SPY or SPX, just depending on if it's a taxable account or an IRA, whatever the case may be. And one thing that I found that was pretty interesting, last month we shorted a bunch of in-the-money puts. So if XYZ is at 53, we were shorting 55 puts in the anticipation of a rally. And so obviously they expired worthless, and then some, the market continued to go higher. But over the weekend, we just stayed flat over the weekend. So come Monday, we actually got to get back into, over the last 3 days actually, mostly Tuesday I should say, we actually got to get back in a lot of these same we're actually in the exact same strike prices, but now the puts are still out of the money, but because volatility's come up so much, we got probably 90% of the premium that we had back when they were in the money puts. So
amazing.
We're in the same positions. There's just that much more fluff in the marketplace right now.
That's intriguing that you would choose the in the money. I hear that a lot from covered call writers, that they choose to migrate to in the money because they're trying to take advantage of, like we talked about, that skew, that downside pop. But when you migrate to the upside, it seems to be that the skew gets depressed a little bit. So you wouldn't think you'd get as much. Obviously, from a premium perspective, there's intrinsic value in those puts,
yeah.
But the extrinsic value, it seems to be as you move to the upside in the skew. I'm not sure how far up you guys are going, but it seems to be less. So I'm surprised to hear that you guys would be writing in the money puts. But it's an interesting approach to take.
Well, what we did, it's kind of like a mirror of, like, I'm sure you're familiar with BXM and BXY,
yeah.
the CBOE's
buy
right indexes. So the BXY performs fairly well throughout time, and what we were trying to base the in-the-money put writing on was something along the lines of the BXY. So we were already called out of a lot of stocks from doing covered calls, so in order to get back into them, we still wanted to have a similar position because we hadn't had a lot, too much movement. So what we wanted to do is create a position to where it was we still had some upside because we were somewhat bullish last month, and still get some premium as well. And it was just more commission efficient, so to speak. Commission efficient. That sounds like a good new marketing term. Commission efficient for our clients.
We're your commission efficient advisor.
I like that. To where we would just go that route as opposed to doing the covered calls. So
that kind of pertains to, I think, a question we'll get to later in the strategy block about why we do some of these spreads and ratios the way we do. And commissions is definitely, or premium and net premium neutral is definitely one of the considerations we hear a lot. I think that's going to do it for the old trading block, and with that we will roll right into the odd block.
The odd block.
All right, and welcome to the odd block. And this has been an interesting day from trading. Like I said, I've been stuck in meetings most of the day, but I was, before we started recording, to pop on the old optionsinsider.com and see what is hot today from an unusual activity perspective. And we're going to start things off with Shutterfly. And because we are in an interior room in a cave where apparently there's no one can get any signal, I don't know the closing prices for Shutterfly or the ADV, but Shutterfly Inc. SFLY. And this is, you may have heard of them, they're somewhat of a competitor, I suppose, to Flickr. They're an online photo company. And we saw a lot of near-term bulls coming in to trade in Shutterfly today. The bulk of the volume, at least in the early part of the day, I'm getting handed a breaking report right now from good old Mr. Navabi. Shutterfly closed at $41.84, up 90 cents. Thank you, sir. See, now you can see how the magic happens when we do the live shows. Yeah, so a lot of near-term bulls coming in the early half of the session. The bulk of their activity focused in March, where a lot of traders are coming in and hitting puts. We saw about 2,000 of the March 40 puts going up on a strike that previously had open interest of just 84 contracts, and the bulk of these puts were sold for about 70 cents each. And obviously these guys want the stock to rally ahead up north or ahead of March expiration. And we've seen this name mostly trading south of 40 recently, but these short put traders are thinking that this guy has some time to go. So yeah, Shutterfly, a lot of near-term bulls popping in and taking some near-term upside. The stock's up about 4% today, or roughly, it was at one point up 4% today. I think the bulk of that was on the news that their CEO was going to speak at a Morgan Stanley tech conference. I love when speaking at these conferences moves these stocks. You know, 'cause you see it listed all the time in the news. So and so is speaking at the Garibaldi conference in Italy, and this other thing, and that moves the stock on a regular basis, and that always just cracks me up.
This could be a big announcement.
Exactly, something big could be happening at this conference over here. So you should be buying the calls or selling the puts right now. It's almost as funny as when stocks move on analyst things, but we talked about analysts before. But whenever I see these conference things, I love to.
Well, I got a good story on that. I know a guy one time that he actually traded natural gas futures based on the groundhog seeing his shadow.
Did it work out for him?
No. I remember thinking, you have way too much money if you're making trades based on this.
Well, I guess you go to Vegas and you play red or black, or you bet on the groundhog. You know, and for him, he thought he had edge in the groundhog.
That must be just like the CEO speaking.
Maybe he planted his own groundhog in the hole.
Ooh, that could be.
That's something you think you could easily to manipulate. You know, you put a little robotic groundhog in there, and have him peek out, and run back in, and there you go.
That's what we need to do. Start sending out fake announcements on the groundhogs. And now's the time to.
I've actually heard, keeping on the groundhog tip, I actually heard there are competing groundhogs now for the Punxsutawney Phil. I think there's one in Canada and one in other places. So there is a viable market in Groundhog Day tourism, apparently. And our next name in the old odd block is Toll Brothers, TOL. They closed at $20.94, down 26 cents. And a lot of people, when they hear Toll or some sort of Toll name, they think of the cookie makers. But actually, this is a luxury home builder. And they popped up on the scanners after they had announced their earnings yesterday. They announced that their first quarter profit was 2 cents a share, which exceeded analyst estimates of a loss of 8 cents a share. So that just goes again to show you how good the analysts are.
It's quite the morsel.
Yeah. See, Sebastian's not here, so someone has to fill in on the bad puns. Now the only thing you have to do is make an off-color joke and say something about the mini metals, and you're good to go. Oh no, and an 80s reference of some type. Right. So think of how to work Dirty Dancing or something else in while we're talking. You'll be good. But yeah, so they were rewarded for beating the idiot analyst estimate of loss of 8 cents a share. And of course, this is coming on the heels of news out of the Commerce Department this morning that new home purchases declined 13% in January. But surprisingly, despite this news of housing declines, and I know Q4 housing numbers were pretty negative as well. I think they were down near 2009 levels back in Q4. Despite that, we're seeing some bullish bets coming into Toll Brothers today. A lot of call buyers once again piling into March. We saw about 10,800. These are in the money, or actually they were in the money when we wrote this. Now they're a little bit out of the money, but they're March 21s versus an open interest of about 2,000 contracts, so a good amount of opening paper. At least 4,100 of these calls getting picked up for about 93 cents. Obviously, these guys want to rally. They need to rally of about 4.5% to break even on these trades. And not surprisingly, too, this implied vol rose about 8.5% on this name to about 39% based on this buying activity. So like I said, a luxury home builder, I don't play in the home area too often, but it's an interesting thing to see nonetheless, despite all the negative news we've been hearing about housing. I know on top of that, a noted economist, I think it was Schiller, on top of the housing data earlier this week, and I take economists with a grain of salt like I do analysts, but he said he thinks the housing market can drop another 15 to 25% over this coming year. So all the negative news coming out of the housing sector is one of the reasons why I wanted to highlight this activity, because it does seem so contrary to what we've been hearing. A lot of call buyers coming in to Toll Brothers.
It does. I think that and the luxury home side of it, I have a couple thoughts on this. And the luxury home side of it, apparently what this might be saying is that the people who have the money to buy luxury homes, they don't go into recession because they have the money to buy it anyway.
That's true.
The other thought, you're right, there's definitely a lot of scary news going on, or a lot of negative news going on in the housing market. I think I had heard today on the radio that 2 years ago, 29% of all home sales were foreclosures. Wow. And then this past year, take this for whatever you want it to mean, but it's better now. Only 26% of all new home sales, and the person reporting it was talking as if it was good news, and I'm thinking that still doesn't sound very good. So I don't play in the home builder section. I just know that after having my house on the market for 13 months a couple years ago and lucking out and having it sell in July of 2008, that I don't like to invest in things with which I'm not able to go click to get out of. And so that was just kind of, and I wasn't trying to dabble in the real estate market. We were just trying to move. And just after that experience, I couldn't even imagine what a lot of people are going through. And with everything going on, and with Schiller saying what was said earlier this week, it's not a fun time in the real estate market. But for Toll Brothers, apparently the upper end people are able to afford it.
But of course, on the flip side, those houses have a lot more to come down too. It's easy to go from $4 million to $2.5 million. And that's a substantial hit. And I agree with you too about the people saying that the numbers dropping from 29 to 26 is absurd. That's like people coming out all the time and saying, "Oh, well, unemployment is dropped from 10 to 9.5, so therefore
times are better."
Exactly, the bull market is upon us. Everyone celebrate, regardless of the fact that we're still at 1970s levels for unemployment. C'est la vie. No one has a job. No one can sell their house, but still, the market still rallies. The market just refuses to die, except when Gaddafi possibly gets shot or Gaddafi goes into turmoil. Gaddafi might be what it finally took to break this market. None of the other indicators.
He was long a bunch of SPX.
That's what it was. First it was it was the Osama puts after before 9/11, and now it's going to be the Gaddafi puts. He probably came in and got short everything before he made this faux death and this faux revolution.
Yeah.
All to get the downside on his money. Speaking of which, have you seen that they froze all of Mubarak's assets out of Egypt? Apparently that guy is and his family have stolen that country blind over the past 30 years.
Wow.
I guess if you add up all their assets, they dwarf Gates or at least approach Gates and Buffett and that sort of thing. If you have a lock on the Suez Canal for 30 years, that could be a pretty lucrative thing, I imagine.
That's why we're in the wrong business. We need to get into totalitarianism.
Dictatorship is undersold.
Much more lucrative.
You don't see many openings in that anymore. I look at now and then on Monster. I'm like, where can I get my totalitarian dictatorship this year? And it's always in some far off little Banana Republic island that I really don't want to take my family there. But there are things available if you want to travel. But I want them a little closer to home. Maybe I think there's an opening in Cuba pretty soon, so maybe I can swing down there and take over that one.
I'd just settle for Baraboo, Wisconsin, or something like that.
I'm with you. It's God's country.
Well, Wisconsin is having its own turmoil these days, so maybe.
So we got a shot. Let's go up there.
Head on up to Madison. That's where Rodriguez is actually going. He said he was going to the Wisconsin Dells to vacation. I think he's actually going to usurp the governor of Wisconsin and become
There we go.
a local dictator up north and control the lucrative cheese curd market. All right. And with that bit of nonsense, we will close out the odd block and roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the section of the show where Uncle Mike and I sit back and we crack open a beer and we light up a stogie and we allow Tim Navabi to take the reins of the show. As terrifying a prospect as that may be, I am now handing the microphone over to good old Mr. Navabi. Mr. Tim, what do you have in store for us today?
Okay, well, I found it very interesting. As we were getting ready, I wanted to look up what were the most actives at Options Express, and it just played right out. I mean, number 1 is the SPY, number 2 is Apple, 3 is Netflix, 4 is the SPX, then we have USO, SLV, the Qs, the RUT, the FAS, and Citigroup. Interesting, Citigroup way down there on the most actives at OX.
Yeah, that's interesting. Citigroup usually dominates the list on a regular basis between the stock price being so cheap and then the options being so cheap. And of course, Sebastian, if he was here, would throw in his fact that all that volume is nonsense. So I have to just put that in there for him. But yeah, City coming in low. I guess where did City close today?
City closed at 469, down a penny.
Okay, figures. I have some upside in City, so of course that'll be one of the ones that goes down. Anyway, I'm batting 1,000 these days. Like that's all I'm going to say.
So then the other thing I wanted to bring up here, a couple other things here, was one of the trade recommendations from Rob K, as I know him, I call him Rob K. Kurzakowski is his last name. He had a trade recommendations on going long the bonds. He had some resistance at 120.16. He thought if it can break that he had a target of 123.16. So a full 3 points he was looking for. When I looked at the range today, I see that it just gapped over 120.16. So that trade looks like it's to be on right now. Some of the other support and resistance that he had support down at 118.26. First level of support, second level 118.12. But I guess we should really concentrate on the resistance here. I mean, it's really just kind of blown through this. Second level of resistance he had was around the 120.26 levels. So Rob's trade seems to be working out so far.
Yeah, and listeners, if they want to hear more from Mr. Kurzakowski and his insight into the credit markets, then they should check out his Espresso newsletter. He writes that with, was it Mike Zaremski?
Mike Zaremski, yep.
Two very dense names on that newsletter that I always have a hard time getting around. But that is obviously featured on the OX website as well as the optionsinsider.com. So our listeners, if they want to get more of Mr. K's predictions and recommendations for those markets, surf on over to the Options Insider. Check out the Espresso newsletter. It's on there every morning. And there's a morning futures roundup on there as well. And those two usually give you a good start for what Mr. K is thinking these days in the derivatives market, the futures market particularly. And what else is
I've known them for quite a long time.
Oh, yeah?
Rob and Mike.
Prior to when they worked here?
Prior to when they worked here. And I've always found that their trade recommendations, they're not ultra conservative, but they're not putting the pedal to the metal. So they really spend a lot of time, on their research. So I've always liked their trade recommendations. And
I've got to work with Mike Zaremski a bunch in the past, and he's a walking encyclopedia.
Yes.
If I ever have a question that I'm not like, how does this product trade? He can give an answer better than anyone. I think the only one that knows more about futures contracts than Mike is God, quite frankly.
Yeah.
Well, it's funny because when we started doing the show and Rob came on the show, we had set up in our system for whatever reason that Mike was the author of the Espresso. So I didn't even put two and two together until a couple months in that Rob was the other person we had writing that newsletter on our site every day. And so now I get to credit him as the author of the Espresso newsletter to try to make that up for him. But yeah, I definitely recommend a lot of our listeners, if they're active at all in the futures markets, to read that and the morning futures roundup from those guys every day on our website. And what else is chomping at the bit over at OX these days, Mr. Minababi?
At OX, I just also wanted to just bring up some pieces of news here that I got on some of our most actives, like oil. Oil did hit a high of 103.41 intraday. As you mentioned before, that it did plummet more than $2 in the last half hour. 5,000 contracts traded in a single minute. So I thought
the big crude or the mini crude?
that I have on the large size contract.
Wow. That's a big
a
thing
lot
to
of
go
oil.
in the pit.
That's
in
a
few
slippery
minutes.
trade.
Yeah. Sebastian is here in spirits.
Trying to help out.
And some of the other news on oil that we were hearing throughout the day was that Saudi Arabia, they were going to be pumping an estimated 4 million barrels a day in spare production.
That's one of the things we had talked about with Rob as well on the last show, that the prospect of what would happen to oil if this wave of revolt spread to Saudi Arabia. I did notice, as I was leaving my office this morning, the headlines come out of Saudi Arabia now that they're spending $35 billion in a youth appeasement program in their country to try to offset some of the potential revolt, because they're obviously the big next target. And if they topple, then good goes oil. So yeah, they're getting ahead of it with $35 billion. I guess you can call it probably reforms they should have done a long time ago, and they're just catching up now. But they're putting their money where their mouth is. They don't want this wave of whatever you want to call it, democracy, unrest, revolt spreading to the kingdom next.
Yeah. And that, brings up kind of what I was talking about here, too, about some of the other markets that were moving today, like some of the ags. I think people are, starting to get a little shaky on, the situation in the Middle East. And so, when something I'm reading here from Bloomberg was, wheat resumes plunge as African unrest drives away speculators. So it's funny, about a week ago, you had everyone, jumping into the agricultures, and so all of a sudden now there might be unrest and people might not be spending their money. Let's get out. So I thought that was quite interesting.
I guess when you think Libya, you think wheat.
Yeah, right.
That's where I get all my wheat futures from, Libya. That Libyan rye wheat is just good stuff. Yeah.
So those are some of the news. So some of the news that I have on the markets.
One of the things I wanted to mention with you, and I'm just kind of curious on a personal perspective. I know we talked a lot in the past that OX customers love playing the weeklies and love playing the hot and heavy names in the equity options, and obviously a big name every time we talk about actives at Options Express is Netflix and Netflix weeklies. And if you've been playing Netflix weeklies lately, I'd imagine a lot of your customers are premium sellers in those Netflix weeklies. This has been a rough week to be short any downside in Netflix. There were weekly puts. In fact, I was having this discussion with some market maker friends of mine at the end of last week, and we were discussing the pricing of tail risk in Netflix and how almost absurd it was that the stock was trading about $235 at the time, I think, and these 205 weekly puts were trading for 50 cents and more. And I'm sure a lot of them were trading them, shorting them. I'm sure a lot of your customers were leaning the same way. It seemed like one of those rare slam dunk type things. Then of course, Amazon comes out with their announcement of their own streaming, which I actually had heard about a long time ago. I thought that was a lot of people we discussed actually thought it would be built into the stock already, and yet apparently that was news to a lot of the people actually trading the stock, because they've taken Netflix on a ride down about almost 30 handles at one point, and it looked like it was breaking the 205 line for a while there. Then it's since rebounded a little bit. But those puts that were trading 40, 50 cents a week ago were trading $4 and more yesterday at one point. So I'd imagine, we won't get into specifics obviously, but I'd imagine there were a lot of frantic margin calls coming out of OX over the past few days in these Netflix traders.
Well, that's the thing with when you're doing the high probability trades, you got to realize that even though it's only going to happen 2% of the time or 5% of the time, it's going to hurt nonetheless. Right. Just because it's high probability doesn't mean you're immune to risk management.
Yeah, I think for a lot of these traders who sell these, these tail risk, it's hard for them to go into selling a 50 cent out overpriced, in their opinion, put, and then buying a one strike down 30 cent overpriced put. That to them kind of, I think, defeats the purpose. So that's hard to sell them on risk management when you're trading the wings. But on the flip side, those are the guys I always saw blow out the most frequently when I was on the floor, is the guys who did nothing but trading teeny puts and teeny calls all day. They would routinely change backers on almost a yearly basis.
But who could have possibly predicted this type of a move,
exactly, right?
The person who bought the puts.
I mean, Netflix was trading, 175 not that long ago, so this thing is quite a bear, and maybe in this one instance those puts were fairly priced. And so anyway, I don't mean to cut you off on that. Has there been a lot of frantic calling on the Netflix weekly front?
It's a really good comment and a really good it's a good comment, but here's what I see, that when the road gets a little rough, they don't stick around. It's a good strategy, for a little while until you get burnt once, So there was some pain, on that initial drop, and pretty much people haven't gone back. I mean, they got burnt and they said, okay, I need to figure something else out.
I'd imagine there'll be a lot less weekly writers in the puts next week in Netflix and others.
and I don't know, Mike. I mean, what do you see when something like that happens? Do you I always tell people, they always ask, well, what do you think, or what should I do? And I say, especially on something like this, and I say, well, go back and analyze the stock, and then make up your mind. Don't just, don't let the market trade you. You trade the market. I mean, if you still are really bullish at that level, stay in. If you've completely changed your story, get out. And so I was going to ask Mike, I mean, do you kind of feel like that sometimes? If you take a hit, you go right back in at the same thing, or do you kind of analyze what it is that you're in and then move out?
Well, if we're ever going to trade an option that far out of the money or do a trade like that, we're out long before something like that's going to happen. Obviously, unless there's a gap, you always have the gap risk. But when you do take a hit like that, the way that I like to tell people to start a trading plan is that don't just look at as I'm going to make 2% a month, 2% a month, 2% a month, and look at the world with rose-colored glasses, because there will be years that you do that every month, but how prepared are you for the 1 month out of 10 or out of 20 or 30 or whatever the case may be for that month where you lose 40%? Because when you're doing the high probability trades like that, you have to constantly be paranoid about that happening. And it's actually a much more stressful trade to me personally than doing a low risk trade. I'm actually much more comfortable if I were to buy an out of the money call option, say, okay, if this thing hits, great. If not, well, I lose 100%, but it's 100% of such a small amount. Who cares? That's a low-stress trade to me. If I'm selling premium, even though the probability is 90 to 95% or whatever all the geniuses that come up with these probabilities say it may be, that scares the crap out of me, quite frankly, because of the fact that I know what could happen.
Yeah, I always discuss it from a risk-reward ratio because, people will use our trade calculator and they'll say, okay, so, it has a probability, 85%, 90% probability of finishing over this strike, and I'll say and then I'll say what's your risk, what's your reward, and then they're not really sure about that, and I'll say okay, so you're going to pick up a couple $100 and you're going to be risking $5,000. How does that sound?
Well, it all goes back to the analogy of it's like running in front of slow-moving bulldozers to pick up nickels and dimes. Most of the time, you're going to get it right, but every now and then that bulldozer is going to shift gears on you, and you're going to get flattened.
I can honestly say that's a new analogy to me, but usually hear getting run over by the train and other things like that. But being chased by bulldozers is
Dimes in
interesting.
front of bulldozers? Yeah, that's a...
That'll do it. I'm getting maximum overdrive things in my head now, images. That'll be the Sebastian 80s reference right there.
There we go.
There we go. Now we are complete. We have channeled him in every way except for the mini metals reference. And Tim, I know we talked before about we got some interesting listener questions about portfolio margin. I think it'd be a disservice to bring it up here because we could spend a whole segment on that, I think. So maybe next time you come on the show,
sure,
we will talk at length about portfolio margin. People are writing in with all different questions about portfolio margin. We also get it on our site on a regular basis. I'm sure you do too. How does it work? How do I qualify for it? Why can't I buy options on margin? Those sorts of things. So it might be something good to get into for your next appearance on the old Express block.
And if there are any, Options Express customers, they can always find examples and, FAQs on portfolio margining if they want to, right on their balance page. They can just look at the upper right. There's a little link that says Margin Guidelines, and near the bottom they discuss portfolio margining and give some examples of it. So, in the meantime, before we come back and discuss it in detail, if somebody wants to take a look, they can do that.
A good tip, and I want to mention too, I neglected to mention it on the open of the show, but we do have that landing page for you to visit and get that special free trade offer from Options Express. Or if you are not an Options Express customer and all these savvy features that Mr. Navabi and Mr. Kurzakowski and Mr. Grigas have talked about over these past few months have intrigued you, then surf on over to optionsexpress.com/oxradio and you will see that you will get a number of free trades there. And if you trade actively or do some complex strategies, that could be some significant savings you can get just to come in and try out the platform for free. And if you don't like it, you don't like it. But if at least you can come in and no cost to you to try it out. And with that, we're going to close out the old Express/spread block and roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is the section of the show where Tim and I get a break and we sit back and listen to Uncle Mike talk about option strategies. And actually, this is going to be a little bit different section because we all are in the room together. It's kind of fun to make it more of a conversation, give Uncle Mike a little bit of a break too. And we've had a lot of interesting listener questions ever since we started talking about opening up the voicemail lines and, of course, the forum on optionsinsider.com/forum for the listener questions for the option block. I've had a lot of great feedback, a lot of great emails as well. And one of the ones we received the other day, and I apologize to the listener who sent this in because I don't have the site open in front of me, so I can't credit you with the username. We'll call you user X. But he asked a variation on a question we received quite a bit, and he asked that since we talk about ratio spreads a lot on the show, what is the main criteria we use to set up a ratio spread? Is it delta? Is it gamma? Is it something else? And so I thought it'd be a good way like that to open up a discussion of Mr. Navabi is pulling up the site as we speak, so maybe I can credit this one user. But yeah, I think the interesting way to get into that discussion is, of course, to discuss ratio spreads in general. And like any other spreads, there's no one criteria that you use to establish a ratio. There's many different criteria we see, and what he named delta and gamma are two of them. We see a lot of users coming in too often using premium, maybe as potentially a misguided approach to do their ratios, where they are very fixated on cost. They want to be premium neutral as opposed to Greek neutral. So they use a 1x2 or something else along those lines to make sure that, say they're buying protection on the downside, and they don't want to pay all that premium for a downside put, so they'll sell 2 calls on the upside of their collar and take a little bit more risk, but that will offset some of their premium. So I'd say a lot of users, and we can get into the pros and cons of that, a lot of users try to go premium neutral when they set up ratios. I think a lot of the more savvy traders will actually use it as some sort of way to leverage a Greek, whether they're fixated on gamma, they want front month gamma and long-term volatility, they'll set up a ratio that way. And you guys, what are the criteria you guys use when you're setting up ratio spreads particularly? Uncle Mike, you can go first since this is your segment after all.
All of the above. The first thing, just to kind of define what a ratio spread is, let's talk. There's a ratio front spread and a ratio back spread. A ratio front spread is when you're selling more options than you're buying. So you buy the 50 call, you sell 2 55 calls, or you buy a 60 put and you sell 2 35 puts, or whatever the case may be. A ratio back spread is when you're buying more options than you're selling. So you buy a 50 put and you buy 2 50 puts and you sell a 45 put. So with that, let's focus on the ratio front spread today when we're selling more than we're buying, because I think this is how a lot of people get involved in the ratio spread, at least initially. And we do back spreads as well, but for the most part, we're primarily front spreaders, I would say. One of the biggest mistakes of ratio spreading is trying to make it perfect. If you're a perfectionist, I'd strongly recommend not trading ratio spreads, in that you'll see, well, you know what? I can sell 2 of these 55 calls, and if I sell 2 of these 55 calls, I can buy a 50 call, and it comes out to, wow, even money. It doesn't cost me anything at all.
That's what I was going to say. That's really the danger with the premium neutral strategies, is it makes you not pick optimum strikes for the strategy, but optimum strikes for premium, and that becomes, we see that a lot with collars. I'm sure people come to you, they always want zero cost collars, and I always tell people, that is not the way to do a collar, because you're not unless you really want front month for some reasons, you're not maximizing the put portion of that collar. You're paying time decay on both of those, or you're collecting time decay on one, you're paying on the put, you're kind of making a scratch. Whereas if you want to optimize your collar, it won't be premium neutral, but you can roll the put out a little bit and do that. So when people focus on the premium neutral stuff, they tend to get into that sort of zero cost thing, or they'll find they want to do one strike, but they do 2 of this other strike. It's premium neutral and becomes, like I said,
you're delta negative.
You almost use a Sebastian word there, but yeah, it becomes a less than optimal strategy for putting on your spread.
It is, and don't let if you try and just overemphasize the importance of, I don't want to pay anything for this, and saying paying premium, it's of the devil or whatever, you're going to end up being in a trade you don't want to be in necessarily, because the traditional 1/2 ratio spread that a lot of people use as a stock repair strategy, and we use it all the time. If you're premium neutral, meaning you get into the trade for even money, almost every time that trade starts out as negative delta. So if the stock goes higher, and if it goes higher in a hurry, that trade actually hurt you. And putting that on, if let's say you're putting it on in addition to 100 shares of stock you own, you put on this 1/2 to where you XYZ's at 50, you buy the 50 call, you sell 2 55 calls for even money. If that stock goes to 55 immediately, then that 1/2 ratio spread section actually is working against you. Now, don't get me wrong, we're premium neutral a lot of times in these trades, but because of the fact that we have a longer term approach, we can, I hate to say the word get away with it, but we're going to stay in the trade anyway, in that we're going to wait until we're okay waiting till expiration a lot of times when we are premium neutral, to where even though right now we're taking on a negative delta for doing the trade, we're fine waiting. And if you're not fine waiting, then this isn't the right trade for you. So other ways with which we'll set up ratios is where we'll try and set up ratio calendars. Right now, we're doing one with Apple, and that on a collar, we're doing collars on Apple in all sorts of different ways right now. But let's just talk about the covered call section of it. In lieu of a covered call, because of the fact that the March premium was a little bit lower in our opinions at Know Your Options, what we've been doing is buying 360 calls on Apple. Now with that, what we were doing is we were selling weekly 360 calls in a 1/2 ratio. So let's say we own 100 shares of Apple. We do our put, our protection, whether it's a put spread. We don't have time to get into how we're doing that right now, but let's just say we bought a put. And on the upside, we're buying 1 360 call and we're selling 2 weekly 360 calls. And we're actually paying a small debit to do that. And right now, because Apple's pulled back a little bit, we're actually losing a little bit of money on the weeklies that we got into for this week. Now, the way with which we're trading that is that the plan of attack is that should Apple continue to go higher, maybe we'll sell some more 360 calls for this week. We're going to wait and see and make that decision tomorrow. But on that trade itself, because of the fact that we actually paid a small debit for that, volatility increased as Apple went down. We're not going to be hurt so bad on the call side of that ratio. Our plan, in case Apple would have gone above 360, we were planning on rolling from the weekly 360s to monthly 360 or monthly 370s or 375s. And for some clients, we actually did do that. We rolled back on the way down, so it was not a commission-efficient trade, so to speak. But when you're doing weeklies, you have to be very nimble. And when you're doing ratios, you have to be ready for any situation. I know another trader, he was actually excited about the ratio spreads in the futures world. And he's like, well, when are you ever going to be too right? So instead of going long a futures contract, what he would do is he would buy a premium neutral 1/2 ratio spread with calls on it if he was ever bullish. And it worked great for him for a while, and that his losses he didn't care about because of the fact that if it goes down, you have all those options expiring worthless. And most of the time, the futures wouldn't go up too much to where he'd still make a decent amount of money on it. And then it's like anything, if it goes up too much and you're too right, probabilities dictate that's probably not going to happen, but you have to be prepared for the times that it does. I could go out and drive from Chicago to LA and I could not wear my seatbelt, and it's very likely I'm not going to get into an accident and I'm going to be just fine. But quite frankly, folks, I've been in a head-on collision before, once in my entire life of driving, and had I not worn my seatbelt, I would have died.
That actually explains a lot now.
It does, you know. So with that in mind, I think that an analogy that I've kind of used in the past is that if you don't respect what you're actually in and you don't have a plan, I often relate it to driving without a seatbelt. Most of the time you're going to be okay, but it only takes once.
So anyway, I think that actually we did dig up the user's name while we were listening. It was Leon Tankfa, and hopefully he wanted recognition because he's getting it. But if you post in our forum and you put your username out there, then you know people are going to see you. Thank you for that submission, and keep sending in more interesting comments and questions. We've gotten a lot of interesting things, a lot of behind-the-scenes questions, a lot of other questions, and we'll be sure to we'll roll them all into one big segment every now and then, a listener questions segment. We can kind of just sit back and answer all the questions we have coming in. But that's going to do it for this week's strategy block, and we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we sit back and discuss what's on our collective radar for the next few sessions going into the weekend. There's a few obvious things that everyone's watching right now. Obviously, there's the whole who shot JR thing going on in Libya right now, which is Gaddafi dead? Is he not dead? With Libya, it's a little bit more pressing because there is that obvious tumult right now, and it is a very high probability that Gaddafi has been shot, perhaps. So that will be playing out over the next few hours. By the time you hear this tomorrow on Friday morning, you probably will be determined, but that's what we're watching right now anyway, to see if Gaddafi is indeed dead and how that will play into the Libyan revolt. We also have tomorrow GDP coming out, as well as Michigan sentiment on the economic calendar front. So those will be two things to watch, though I'm sure the news out of North Africa will probably be the trump card and all of that. And, of course, not too much left on the earnings front. AutoZone, obviously, is a big market mover, and we'll all be watching AutoZone very closely tomorrow for the earnings. I know I always need to know how much I'm paying for my wiper blades. So
I need some new wiper blades, actually.
That's an important one to watch. But aside from that, not too much on the earnings front. We already had GM this week, and we had some other interesting ones going up already. And then, of course, obviously, with what's going on in North Africa, where people are still talking a lot about the commodities. And I know, Mr. T, no jokes at all, but I know you are watching the natural gas front quite a bit. So I will leave that alone. I will just let you delve into your gas talk now.
Oh, thank God Sebastian's not here today with that one. Yeah, natural gas rate. I'm watching natural gas, crude, gold, and the S&P for actually the Dow a little bit too. We're at some key levels right now with natural gas. It looks like if natural gas is going to bounce, it looks like it might. We're low enough now to where I wouldn't want to short it at this point, but I'm not quite ready to go long the commodity itself. Crude oil, it's around the 100 mark, so whenever you have a key number like that, it's something you definitely want to take a look at. Is gold going to use the numbers that it's at right now and pull back, or is it going to break through the 1400 mark, kind of at a key number there? The S&P, we're at 1300, key number there. And what's that other index that everyone talks about? I don't really look at it too much. It has the 30 stocks in it.
Yeah, I forgot the name, escapes me. I think it's the Nababi Index.
Yeah. the Dow.
There we go.
Yeah,
that's what it is.
So, Mountain Dew Index, I think that's what it is.
Oh, yeah, that's good. So just looking at a few things right now with key numbers where they're at some spots right now to where it's going to be interesting in these next few weeks as to how things play out. I remember a couple weeks ago when things first started happening in Egypt, I remember just being kind of concerned over the marketplace and that I didn't think that was going to end quite as peacefully as it did, quite frankly. And with the stuff that's spreading out, what's going on in the Middle East right now kind of reminds me of was Egypt the first one to have a lot of other bad things happen? So are there other countries that things may happen in? And so I'm watching the news. Did I just say that?
Yeah. I mean, that's kind of the question on everyone's lips these days. Is we've been talking a lot on this show whether the market's oversold, undersold at these levels. I don't think anyone's weighing in on the undersold side, but just in case, we've been debating that at different levels, and now it seems the one catalyst that finally seems to be able to pull this market back a bit is the escalating unrest in the Middle East and North Africa there. And Egypt seems to have, obviously it's not completely resolved, but it has at least the main issue has been resolved now, and they're trying to put the pieces back together. And we see Libya still in turmoil. We see other nations in turmoil. My question is what are you guys leaning now, looking at this going forward? Do you think this still has the ability to drag down the Dow? Do you think this will finally be the catalyst that sends us back maybe down to around 11,000 in the Dow and maybe down 1,200, 1,150 in the S&P? Or do you think Libya is not the one to maybe the Saudis, maybe if it starts seeing unrest in Saudi, what do you think will take that? I guess it's the flip side of that coin. What will take us down back to those levels? What will convince these bulls to back off?
It'll be tough. I mean, this is a strong bull market just from last fall. I mean, in looking at where we were a year and a half ago, and I remember not last summer, but the summer before, the summer of 2009, and looking at the S&P, can this thing crack 1,000? I remember thinking that. I mean, we've come up from the 666 level, kind of a scary low in the SPX when you think about it, but I remember when we came off that, it's like, wow, we've come up that much from the low. Is this thing going to go past 1,000? And well, as we all know, it did. So at some point, we're going to have a pullback, and not only have we had quite the rally from this last fall, but we've also had a huge rally in that we have doubled from the low of the market in 2009. So for those of you that were smart enough to buy the S&P back when it was in the 600s, then wow, you're really doing pretty well right now. And at some point, stuff has to pull back, and I don't know if this is going to be the only thing that could drag it down for the S&P to 1,200 or whatever the case may be, but this could be the start of something, because in order for us to have a pullback, you need to have some reason to do it, and maybe there's a piece of Scotch tape on the bottom of a car that doesn't make it go fast enough, who knows, but this one's a little bit bigger than that, so definitely, I always tell people our marketing tagline is we're long-term bullish, short-term cautious, and we're definitely on the cautious side right now, that's for sure.
Mr. Nababi, what are you telling all of your various callers in at the OX trade desk right now? How are they leaning? I guess is a good question too. Are they leaning bullish or bearish, or what are you seeing from all the calls coming in?
I'm seeing that this is an opportunity for people who are bulls to get long, and I kind of agree with Mike that right now this is a catalyst for a pullback. I think that it has potential to be worse. I mean, you mentioned it right there. Saudi Arabia. That's a big issue, a big number. Now, I don't claim to know anything about their politics or their system or anything like that. But I mean, it's. I think that's a big deal. So we'll just kind of have to wait from there. Other than that, I mean, we have been extremely busy all week long. And what's been keeping us busy is oil, gold, geopolitical unrest, and with this little pullback, now we are seeing the people that were a little bit more serious about getting long. So, people that I haven't talked to in a while, they are starting to call up and they are starting to, ask some questions, get some quotes, place some orders, down below. So
So the bulls are just using this as a chance then to just get long. Maybe they waited for a little bit of the pullback, and this is what the opportunity they were waiting for. Then interesting. So they're not seeing this as a head for the exits. The Dow's dropping 1,000, the S&P's dropping 100
Not
points.
yet. From my customers, I haven't seen that yet. So,
I guess the big question now is $35 billion enough to keep Saudi Arabia from erupting in flames? That's the big question. If that doesn't work and that kingdom goes up in flames, then I think we'll be seeing the Dow back below 11,000, VIX well north into the 40s, oil over 100, and all sorts of other calamitous events unfolding. But I guess that's the big question right now. Is $35 billion enough? That's a good headline for an article. Is $35 billion enough to offset the apocalypse? All right, and with that, we're going to close out this live session of the Option Block. I want to thank all of my cohorts here for joining me live, except for Sebastian. He gets no points. He gets no plug this week because he didn't make it on the live show. But we're going to start off with Mr. Navabi. What is coming up on the OX platform, and what's going on at OX you want to tell our listeners about?
Sure. At Options Express, we have something new now available to our customers called OX Social. So it's sort of like a...
Is that live now, or is that...
Yeah, that's live now. Yeah. It's just a sort of a gathering area, for people to talk about their ideas. I wouldn't, call it a chat room, just, more of a social area for customers to get together.
So did you post your status up there, perhaps with a nice little suggestive photo? Can people come in and poke you on the social?
I can't.
Can the ladies come poke you on the
I got the official letter from compliance this morning that said you're an OX employee.
Really?
Stay off. In fact, you can't even get on if you wanted to.
A lot of ladies' hearts are broken. I know that.
So the OX Social is new and exciting for us. Some of the other things we have going on are some events, and we have some webinars, for example, coming up. Let me just bring them up here real quick. Sorry about that. Here we go. So we got some webinars coming up. There are some coaching events that are available. We also have, I mentioned it before, Why Smart Money Trades Futures. That's on the 1st. March 1st, 4 o'clock. On the Wings of a Butterfly, both broken and fixed. I really like that. I think that's going to be a really good webinar.
Who's doing that one? Can we come up with that clever title? Is that Joe? Or
some idiot's doing that one.
Is that you?
That's mine.
That's your clever. See, I knew we've been rubbing off on you, making you far more poetic these days, and all of a sudden these grandiose and alliterative titles coming out of Tucson. I love it.
No, it's good because that's it's a trade that I see often. People ask about it. They ask how it works, how to put it on, and I'm really glad finally that someone's talking about the broken butterfly. I also like the time that it's at 9:30 p.m. because I talk to a lot of people that have I couldn't get there at this hour or that. So this is nice, nice late in the evening.
Put the kids to bed, go back to work. That's how we do it in the Tucson house.
So that's what I've got for some upcoming things.
Let Uncle Mike tuck you into bed with a nice webinar. So put your laptop on your bed next to your sleeping wife, and you let Uncle Mike just talk you off to sleep with some talk of broken wing butterflies.
That's how my wife cures her insomnia at times. That's why we set it up that way. Sometimes it's at the Tucson house, it's a bedtime story. Some people talk about princesses and things like that. At my house, we talk about snowmobiles and option trading.
Tonight, Timmy, it's the adventures of the broken wing butterfly. Not again, Dad. Oh, yes. And so, aside from your butterfly seminar, what else is coming up at Know Your Options Inc., Mr. Tucson?
A couple things. And first, I appreciate the compliment on the broken wing butterfly name. But when I worked at OX, they rejected my all-time favorite title for one of mine. They wouldn't let me do it. I was talking about fixed income trading, and they wouldn't let me do it because marketing didn't like the title. Jump on the boat with the 10-year note, and that still breaks my heart to this day.
Now that you're running your own ship, you can do that kind of thing.
Well, we don't trade the 10-year note enough to do it. So unfortunately, but anyway, I want to do a lecture on the 10-year note just so I can use that title at some point. I'm thinking about starting a 10-year note strategy just for that purpose, quite frankly. But anyway, OX Marketing is very good at what they do, so it probably was a bad title anyway. But with that in mind, a couple things. I will be guest speaking at some upcoming Options Express events in Phoenix on March 11th. I will be there, and so for those of you who are in Phoenix, stop on by. In Orlando on March 26th, I will be guest speaking there, and so For those of you in Orlando and Phoenix, feel free to stop by. And then looks like I will be in LA on April 9th. So for those of you in those areas, feel free to stop by. You can sign up for the event on the Options Express website, or go to Know Your Options, and we'll be happy. Go to knowyouroptionsinc.com. Contact us. We'll be more than happy to give you guys any information on those events. And just excited about getting out there and seeing people face to face.
There you go, listeners. There's your chance. See Uncle Mike in person. Live the legend. And of course, for all of our listeners, make sure if you want to hear more of the unusual activity or the breaking options news or any of the other topics we discuss on the show today, then surf on over to www.theoptionsinsider.com. If you want to send us a question for the forum, then just visit the forum tab and scroll down to listener questions for Options Insider Radio, or for listener questions for, the Option Block. We'd be happy to have your feedback. If it's interesting, we will read it live on the air like we did today. And that's going to do it for this episode of The Option Block. I want to thank all of our listeners for downloading and streaming and subscribing to this show, and we will see you next time.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.